Welcome back to the channel, everyone. Today we're breaking down one of the most shocking, high volatility, high drama, microcap stories in the entire market right now. A stock that has moved so violently that most investors still don't understand what's actually happening underneath the surface. And today, we're going to decode everything. The company's strategic pivot, the wild price action, the unprecedented short interest, and whether this setup is a legitimate opportunity or a ticking time bomb. Let's get straight into it. Safe and Green Holdings Corp., ticker SGBX, has been trading in a staggering 52-week range from $122.88 down to just 181 cents. That type of volatility looks unbelievable until you understand why. The market is attempting to value a company that is no longer what it used to be. Not even close. This pivot was formally announced just one day ago, including a full exit from the traditional modular home construction segment. Not a mild adjustment, not a small cost-cutting strategy. This is a complete business model surgery, shifting. This creates a massive disconnect between the old market narrative and the company's new direction. The stock, the valuation, the sentiment, none of it reflects the new pivot yet. And that disconnect is exactly what creates volatility, opportunity, and risk all at once. SGBX has a $21.7 million market cap, a very tight float, and a long reputation as a struggling construction services company. Suddenly, the company is talking about. Naturally, the market is confused. When a company with this background announces a pivot this extreme, you're going to see chaos in the price action. And that's exactly what happened. On November 20th, SGBX traded over 8.22 million shares, far above the 30-day average of roughly 5.4 million. The stock price swung from $2.91 to $3.85 intraday. That kind of move on that kind of volume is not institutional slow accumulation. Before this pivot was announced, the stock was collapsing due to long-term revenue declines, losses, and weak sentiment. But now, the battle between old long-term holders, new momentum buyers, heavily leveraged short sellers, is driving unprecedented volatility. This is exactly the kind of setup that triggers social media hype, retail attention, and sudden violent price spikes. This is also the exact setup that has triggered multiple microcap short squeezes throughout 2024-2025. Short sellers are betting heavily that this pivot is a facade. The company can't execute. More capital raises are coming. Long-term losses will continue. And because short sellers are so confident, they are massively over-leveraged. That's where the danger and opportunity lies. The short thesis makes sense if you only look at the old company. Declining revenues, weak balance sheet, negative equity, recurring losses, low institutional backing, but the counter thesis is almost entirely technical, not fundamental. A few potential catalysts could create a chain reaction. A major purchase order, an announcement validating the energy pivot, new drilling updates, a successful AI well site monitoring pilot, a 13F filing showing a credible institution taking a position. Any of these could force short sellers to buy back shares at the worst possible time, causing a rapid price explosion. But be careful. If the company fails to execute, or capital raises dilute the stock, or the pivot stalls, 430% is unsustainable. A sudden drop could mean shorts found more shares. A spike means they're trapped. If it hits zero for multiple days, equals squeeze pressure building. Over 55% of recent volume has been off exchange. That's a major red flag that short sellers are heavily involved. Any positive official update could accelerate a squeeze. Historically, SGBX focused on modular construction, recycled shipping container structures, green building initiatives, but the financials never supported long-term growth. Trailing 12-month revenue, $3.38 million. Net losses significant and accelerating. That's exactly why management abandoned the old model. Including micro-refineries, industrial generators, portable Bitcoin mining infrastructure, real-time pump jack optimization to increase output, improve margins, create recurring revenue. This is meant to leverage the company's existing oil and gas leases, turning them into higher-margin, technology-driven assets. SGBX is the intersection of an extreme business pivot, microcap, retail excitement, hedge fund disbelief, and one of the highest borrow fees in the entire market. It is both. Whether this becomes a spectacular turnaround or a case study in corporate overreach depends.